So today I'm going to talk about a stock that I own, and it dipped quite a bit yesterday, and I actually think this is a big buying opportunity. And in fact, I was out buying this stock because I think this is a good opportunity out there in the market right now. Every so often you get some overreactions from earnings where it drops a little bit too much than what it should have done, and it is an opportunity to buy and get a stock at a really good value. We've seen that with the likes of Google in the last few weeks when it touched $150. We saw the likes of that from SoFi when it was back down at $6 after triple beat of earnings. We saw something similar from Hims and Hers when it dropped back down to $14 off GLP-1 news that didn't really affect it. Sometimes you get those opportunities in the market, and we've had a few of them this year. Right now, I think this is one of them, and I'm going to tell you guys about it. If you could, hit the like button if you're not here, subscribe. Let's get started. Now, just a quick shout out. If you join the Patreon, links in the description, £5 a month. I'm going to do a review of DraftKings earnings because that was a very big mixed bag in that earnings. Some good, some bad. I'll do a full earnings breakdown on Patreon over the weekend. As well as that, I'll do some more earnings reviews, and there's a video of Celsius earnings and my thoughts on them on the Patreon. You can join that, links in the description. As well as that, if you want some free shares to buy the stock that I'm talking about, links in the description. Join through there. You could get a share worth up to £100, and that's personally the investing platform that I use and the platform that I buy shares of this stock in. So that stock is Mercado Libre. Meli, I have been buying some shares in this, and I think this is a very good opportunity. I think it's had a big overreaction after the earnings yesterday, and I think it's a very good opportunity to be looking at. It fell 16% yesterday, and I actually think the earnings were actually pretty good. So I am currently taking advantage of this, and if the stock continues to keep dropping, I will buy more shares. This is currently like my 6th largest position, and if it does carry on dropping or stays around here, I could bump that up to about my 4th largest position, because this, in my opinion, is a great company. Now, Mercado Libre, what is it? Now imagine you've got Amazon. Everybody uses Amazon daily. It's become part of our lives. When we're buying something, we just think, we'll go on Amazon, I'll buy it, I don't have to do anything, I don't have to go out, and it'll be on my doorstep in 24 hours. Now imagine buying Amazon 10 years ago, and that's exactly what it is with Mercado Libre. But it's not just buying Amazon 10 years ago, you're also getting the likes of PayPal 10 years ago. So you imagine PayPal back in 2014 and how much progress that's done. Imagine getting both of these companies in one. In fact, the payment side of Mercado Libre is even greater than PayPal, which is a scary thing. And what Mercado Libre do is they are all of that in one product. And if you go on the Brazilian Mercado Libre page, you could see here about all the products to do, and it's just as you can see, all the products for sale. It's just like going on Amazon here. And they operate in the likes of Latin America. And these Latin America countries are about 10 years behind us from a e-commerce point of view and also from a fintech point of view. So imagine going back to these countries, they're kind of in the place of 2014 in the likes of the e-commerce boom and the fintech boom. So imagine we've seen the growth potential. Now you get the opportunity to get it where it was at 10 years ago with Latin America. It's behind the game. But what that does mean is great opportunity, because these are growing rapidly. I mean, we know that they're still going to grow in 10 years time because that's where we're at in the likes of the US and the UK. But going back to Latin America, these are still in hyper growth mode. They're still scaling up rapidly. And with investing in Mercado Libre, you have the ability to get into e-commerce countries like Mexico, they're still growing at 14%. Argentina, that's growing at 14%. You've got the likes of Brazil, Chile. These countries are growing rapidly in e-commerce and fintech. And the way that Mercado Libre has done so well in here is because they actually got ahead of Amazon. Amazon actually got beaten in Latin America, because what was happening about 6-7 years ago is Amazon realized that they had to build fulfillment centers to get fast deliveries. Now they started building them in the likes of the US and the UK, for example, but they were very slow to do it in the likes of Latin America. And what Mercado Libre did is go, hold on, they're not going to start building these fulfillment centers in our countries for like the next 2 years. Why don't we do that, and we might be able to beat them? So Mercado Libre managed to get the jump on Amazon a couple of years ago with a lot of these fulfillment centers. And the big issue that Amazon also had is that there wasn't a great fintech infrastructure in Latin America. So for Amazon, obviously you need to go buy things online. People in Latin America were struggling to do that because there wasn't great access to the fintech market. So what Mercado Libre did is go, we're going to solve that as well. We're going to create a platform called Mercado Pago, and what we're going to do is let people get fintech access, get access to easier credit as well, And that has scaled very well because not only are people using that fintech to go buy on Mercado Libre's website, they're now using the fintech platform to go buy on other sites in Latin America. So you're kind of here getting the PayPal and Amazon of Latin America, and when you look at that, you're getting it from such an early stage, and we've seen what happened in the last 10 years. If you look at from 2014 to 2024, look at the progress that PayPal and Amazon made. Imagine getting that exact opportunity now in Latin America. And you look at the population size, you're getting Brazil of 216 million, you're getting the likes of Mexico of 228 million people, you're getting the likes of Argentina, 46 million people. You compare that to the size of the US, for example, which is 334 million, great population size, but in Latin America, you're even getting a bigger opportunity than the US market here, which is a really exciting thing. Let's get stuck on to why the stock is dropping. So they reported earnings yesterday. I thought the earnings were okay. You can see here they did miss on the EPS. Now it's very key to say that Mercado Libre do not guide for their earnings. So analysts are guessing what they're going to do. That's why we always see big misses in Mercado Libre's numbers from analysts. And if you look at revenue, they did beat, but the key thing is they grew 35%, so still very, very good amounts of growth. Now, looking at these numbers here, my first reaction was, did Mercado Libre miss earnings, or did analysts get it wrong? And my answer to that is they got it wrong. They did not realise Mercado Libre were going to do a big investment in this quarter, and that's why they got it wrong. And in my opinion, analysts threw the toys out the pram and went, oh, you missed that EPS, and they didn't actually look at, hold on, well, actually, are they not creating a path for a greater future? Is that not the reason why they missed the EPS? And I think if you're a long-term investor, you looked at these numbers and you thought, I'm okay with a miss. I think if you're an analyst, you got a little bit upset going, oh, you missed our EPS estimates, without actually looking what's going on under the business and seeing the fundamentals continue to grow. I think that was the key thing. So looking at the headline numbers, there was definitely nothing wrong with the headline numbers. You look at net revenue, grew 35% year over year. On an FX neutral basis, it grew 103%. Now, the big thing at the moment is there's a lot of currency impacts. This is the only thing with Mercado Libre is that you get exposure to the likes of Brazil and Argentina and their economies, which are living more volatile, and the currency devaluations happen. So right now there's a bit of currency devaluation going on, and that's why you got to take that into impact. But even with the currency devaluation going on, this is still growing rapidly. You take the currency devaluation out, and if the currencies are able to stabilize, you've actually got a company growing at 103% here. We had income from operations of 557 million, and you can see a total payment volume, which is like the likes of the Mercado Pago part of their business, was up 34% year over year and 73% on an FX neutral basis, and gross merchandise volume, which is like the Amazon part of the business, was up 14% and 71% on an FX neutral part of the business. If you look at unique buyers, more and more buyers are coming to the platform. You can see here unique buyers was up 21%, so people are just rapidly joining and using the platform, which is what you want to see. They also did kind of like Amazon Prime, they did improve that Amazon Prime, which once again, it's just getting people into the system of Mercado Libre. You're using the e-commerce site, you're using the payment site, you're going to get Meli Plus or Meli Plus Essentials, and you're going to get access to like the media platforms and access to Disney Plus, for example. You look at the advertising platform, this is big thing is, in this video here, I don't have enough time to break the full business model down, but I'm showing you parts of it. But if you look here, advertising is another growth driver for Mercado Libre. You've seen the profitability that Amazon is able to drive off the advertising part of their business, and that's what Mercado Libre are doing. And if you look here, even the advertising part of the business grew 37% year over year, and we know that can be a very profitable part of the business if that continues to grow. Now, the credit card had another great quarter, as you see here. It grew 172% year over year and 28% quarter over quarter. But if you look here, what they did is they invested 76 million into scaling the credit card portfolio. And you can see this is going to create some short-term margin pressure, but these investments are to improve the long-term credit card drive of Mercado Pago. So they did a big investment into their credit card part of the business, and this is to generate more business going forward. So this was a short-term impact that will potentially give them more growth driver, because you can see here, the credit card is in demand. They are trying to service the big volume here so they make more money in the long term. And he's saying when you look at the credit card portfolio, grew 77% year over year. So this is meeting demand here. There's no slowdown here. So what they did is they increased their credit card share total portfolio from 25% to 39%. And this did affect the NIMAL. And the reason why is because the credit card is a structurally lower spread product, and also that they were potentially taking on lower risk users. So people are saying, oh, well, that's not great, but the thing is that because they're serving this credit card, because they're going for a bigger volume of amount of people, is that in the long term, having more people will make up for the potential of making more from these big spenders, which is a big thing. They are going for volume, and with the volume, they'll see the rewards in the longer term. And once again, they showed the big margin depression that was going on because of this investment that they are currently making. So you can see here, they talked about the credit card business that they're currently investing in, which is currently growing rapidly, and they are increasing their ability to serve the demand for the credit portfolio. The other part of the business was that they also invested into a lot of fulfillment centers, which was a 0.8% basis points impact. So the thing is that if you are an analyst, you might throw your toys out the pram and go, oh, they missed EPS, terrible, we're going to punish them for it now. If you truly like the long term where this business is going, you're staring at these investments and going, hold on, you're investing to have more credit card users in the longer term, so you're going to make more money. You're investing into more fulfillment centers, so people have faster delivery, you're able to sell more items. You're thinking these investments are for what are going to show in the financials in 2-3 years time. You like that as a long-term investor. As a long-term investor, you like this report here. You don't mind these investments. The only people that are throwing the toys out the pram at the moment are analysts because they missed the EPS estimates and they're upset about it. In my opinion, I'm happy with this. And if they're investing for the long term and then big money's throwing the toys out the pram because of it, I'll buy more shares, because when these start showing in the financials, they'll all be piling back in to the stock and say, oh, it's absolutely amazing. So as a long-term investor, that's why I think it's an opportunity in this business. Looking at the growth drivers, I mean, clearly you can see here that there's a 24% growth expected for next year. I think that'll increase just as it did this year. This year it started off around about 20% and analysts hiked it up. On the average EPS estimate, we're expecting a increase from $36 EPS up to $48 of EPS, and that's when you look at a forward PE. We're currently down at a 42 forward PE, and right now we're currently at 62 PE, and by the way, that's with a 16% drop on. Before yesterday, this was actually 70 times earnings stock. A 42 PE, in my opinion, isn't bad value, because you look at these numbers here. Let's say, what's the average valuation right now? I mean, I was going to say 20 times earnings, but the S&P is even higher than that. It's, 23, 24 times earnings. So the average company is like 23 times earnings. So you're telling me you can pay double the earnings ratio, because if you get in a company like Mercado Libre, you're not going to get it at 23 times earnings, are you? Because this isn't the average company. You're growing 24% year over year. You've got EPS that's growing at 30, 40% every year. This isn't an average company. So what do you pay for this? And I think paying the double valuation for 4 times the average growth of an S&P 500 company, yeah, you give me that. I think that's a very good value. And like I said, normally this company's traded towards 60, 70, 80 times earnings. So if this company in 12 months' time is going to be 40 times earnings, and normally this trades at 60, 70 times earnings, this is looking a good opportunity already to me. And that's when you look at the execution of the business. I mean, just look at the revenue growth of this business here. Look at the free cash flow increase. Look at the profit increase. The company has now gone from where it used to be about break-even-ish, and the profit margins are just being dragged up more and more to 7.8%, and that's because you've got those profit drivers. You have the scale of Mercado Pago driving up. You've got the likes of the advertising business driving up now, and that's going to create really good amounts of profitability for the business as they continue to scale. We talk about a 7% profit margin right now. They're still investing heavily. Imagine what this is going to be in the longer term. And that's when we look past some of these investments, we're just going to see this dragged up and the profitability and the free cash flow moving up in the right direction. So let me just show you some numbers here. So right now, the company's going to close off around about 20 billion this year. There's a lot of debate on what they're going to grow at. Obviously, they have the ability to grow 20, 30% a year going forward. And we've seen if the FX impact goes, we could even have it over 100% growth a year. I put 15% on the low side to be very conservative, 23% on the mid side, which I still think is very conservative, and 30% on the high side. I think at the moment they're close to a 7-8% profit margin. As they scale, I think we will see a 10% profit margin in the next 5 years, as we've seen it dragged up in the last few years. And at the moment, I've got 20 times earnings down. Now, this is the average valuation on the S&P 500. I don't think they are the average company, but I put it in to start with. And as you can see here, there's not much upside on the downside on those numbers, but I don't think they'll do those numbers. Mid-side, there's only 4% upside. On the high side, there's 30% upside. Now, like I said, I don't think they're going to trade at 20 times earnings. The company already trades at 60 times earnings. forward P of 40 times earnings, historically it's traded at 80 times earnings. I think if you're doing these numbers, you're going to trade at more of a premium. What the premium is, that's the $1,000,000 question. That's the thing with growth stocks. That's why they're a lot more riskier. That's why they're harder to value. You're trying to factor in a lot of future growth, and you're also trying to predict what they trade at. It's a lot harder to predict what they trade at. But let's just take, for example, let's say it just currently holds its current valuation and it does numbers similar to what it used to do or has been doing. I think that is the reality that this stock can command a 60 times earnings multiple. And I'd even argue the case that that could potentially be conservative. When I look at a 60 times earnings multiple right now, the company has big upside. I mean, even on the low side, on the conservative numbers, we're getting nearly 100% on the low side. And that's when I really like a stock. That's when I really like a stock, when I'm putting in 15% revenue growth, and I think that's really conservative, and I'm still seeing 100% on the low side. And if I'm looking at the high side, I'm even seeing even more opportunity. So that's when I really like a stock, and that's what I'm seeing with Mercado Libre right now. I'm taking advantage because I'm seeing analysts throwing the toys out the pram because they missed the numbers slightly, but I'm looking and thinking, well, all they're doing is making investments for the future where they're going to make more money. And I'm just liking it even more to go buy this stock right now. And that's been the story of Mercado Libre since I've owned it. I've owned this stock for around about 2 years now, and since I started buying the stock when the stock was around about $700, which is crazy to say. I've owned the stock since around $700, and since that time frame, the stock is up 139%. It's been a very good performance for the YouTube channel. I hardly mention it on the YouTube channel. I just leave it to do its thing quite often, but that's why I just keep buying. I'm up around about 60% on this position, and the reason why I'm not up 139% is because I just keep buying. I keep averaging up. I keep watering the flowers. This has been a really good stock for me, and as they continue to financially keep smashing it, I just go, I'm going to buy more, I'm going to buy more, I'm going to buy more, and I've got the results. I've got the results from it, because every time I thought I averaged up at 800, I'm up on them shares. When I bought at $1,000, I'm up on them shares. When I bought at 1,200, I'm up on them shares. And I think this is just going to continue, keep winning and keep winning and keep winning. And as it does, I just keep buying more and more, because if I'm seeing more upside, I'm going to keep buying it, and I really like this stock. And I think I've bought twice, and I tell you something, guys, sorry for you guys on Patreon for revealing this, but I'm actually probably going to buy a third time today, because I think it's a very interesting stock to be looking at. So yeah, hope you enjoyed the video, guys. See you in a bit.